Right, let's get going. Interesting charts here. Let us just have a look at this one here. This is pound yen. So nice move into that 200. Obvious target, and we've been building ever since the beginning of the year. That's why I like this fib ratio set up. And you can see every time we dipped into this channel, we picked up and then eventually went into that 200 resistance. So if you're trading this, well done. If you got the 200, great. Where to now? I would back off. If we close here, then it's not actually a sell signal, but it's a very weak close on volume. The story behind that is there is a lot of speculation that the yen is going to see some intervention. So look at the dollar index and get going. So dollar is coming off, but only back to support. So we backfilled this gap from the 1st of November. In actual fact, we've not backfilled it. We've not quite met it. So it's non-farm payroll. It's weekly jobs, isn't it? This week. And so as we come into this, I would think we can come and see 104, 105. However, this is a huge support area. So if we dip and then go back above this 105 and expect that to go back to 23 highs, we pan back. You can see how important that area is. We dropped here in November 22, dropped here in October, and between October and November, that we fell right back. And now we are holding this zone high. Why I'm spending time on this because this is important. If the dollar falls back, that tends to mean there's more scope for the indices to pick up. If this picks up speed, then the safe haven like the dollar being bought could drag the markets back down. And this is the Dow. So you can see that on this daily chart. So the Dow has come into this. So we peaked at 40,000. We've come back into 37,250 and now sitting on this support here. Above the 50-day average, any markets above the 50-day average, you should be buying dips. So if we can hold here and close above 38 and a half, we could potentially go back up and to retest that 40,000. So if you are bullish, I would look at buying 38,200 area. Get to stop underneath Friday's low, which will put it at Friday's low is just under the 38,000 mark. And then see if that can work its way into 38,800 and then 39 plus. Because what we've effectively got is we have this 1, 2, 3 corrective wave, or it's a 5 wave. If you go back to this initial drop, second half of March. So 1, 2, 3, 4, 5. Actually, in fact, the 1, 2, 3 works better because the third wave was deeper. So 1, 2, 3, 4, 5 corrective. Sorry, the completion of the 5 wave into that. Yeah, this works out better. Completion of the 5 wave into the 23 or December highs. So if that's a 5 wave, then you've got a 3 wave correction. 1, 2, 3, which will put it into 38,800. And then you pretty much start again. If that pans out, and we find ourselves up here middle to late part of the week, then it's a question of whether as for the next move, it's a question of whether that holds or we start to drop right back. Okay, so this is a strong downforce. The move, the 5 wave was completed down here last Thursday. So if we end up holding 38.5, then buy the dips. If we end up pushing into that resistance and then we start to fall off, then hold on to your hats. But for the moment, the key is the fact that we're holding the 50-day average, so you should be buying dips in this Dow, and 38,200 is my suggestion at this stage. All right, so this channel is now kaput. I tell you what would be very nice is if we came into the underside of that channel and failed. That's a move. That's a setup I really like. So at the moment dips are getting bought, but just watch out for any move back into that channel resistance. No reason to sell at the moment. All the time above the 50, there is no reason to sell at the moment. So a quick look at the NASDAQ. Yeah, so NASDAQ sat there at that. We talked about this time last week. NASDAQ sat there and bought and held that 23 high. This is back above the 50-day average. So any pull back into this big move here, if we subsequently close back above the 50 again, could take us back up to those highs and beyond. 18.5, 18,750 is a major resistance point. Again, that will be the underside. That's interesting because that will be the underside of the channel again. So I would anticipate that this NASDAQ would fall back into the Wednesday support, which would put it about 17,350, 17,400. And then I'd expect that to push higher as we get into and have the jobs number confirmed. We start to get jobs numbers midweek as well. So that midweek data could pull that up. So again, this has had a 1, 2, 3 wave move down. A significant 4th wave, which makes me think that's why I think the pullback could still hold into that. All right. Let's move on. As a quick look at FTSE. Right, let's pick up speed now because the time's getting on. Yeah, I was tempted to short this. I'd said last week I said on Thursday that was a sell signal, and we immediately closed significantly higher. We had about 2 4-hour sell signals last week, and they both got eliminated. So we poked above this trend line high and we're sitting above it. So at the moment, there is still no reason to sell that. However, a close under that 8,100, and of course the 8,000, could see that tumbling down. But again, we are getting a little bit distant from the 50-day average. Hang on a moment. Yeah, so every time we get far away from the 50-day average, we tend to pull back. So this does need, if we come back to 8,000 and that 50-day average catches up, that could ignite this one. You see that a lot. You get a big move, And then we go sideways. We go sideways because we are consolidating and we're waiting for the averages to pull up. We're waiting to reconnect with support. So here, the 50-day average is sitting down there under 8,000. Pen's not drawing, come on. So I think I think we could pull back to 8,000, 8,050, reconnect with 50-day average, and then go on another run up to that 8,300. So that is the bullish scenario. The bearish scenario is we continue to close lower, close underneath 8,050, and then come and find these lows again, and even lower. All right, but for the moment, pullbacks are still viable in these markets unless we get a significant sell signal. At the moment, I would classify this as a bullish consolidation. Right. Laura, I've talked about. FTSE we've seen. Let's start looking at some commodities. So, okay, another bullish consolidation. So we talk about consolidations today. Huge sweep up. So all these dips, all this channel low held, and then in February, once we reconnected with that channel low, we went on a really nice run. A 1, 2, 3, 4, 5. 1, 2, 3 wave correction. That's a very poor 3 wave correction. I am sort of stretching that a bit. And then we went on another 1, 2, 3 wave move, and we've had a 1, 2, sort of 3 wave correction. So we've got another channel hold here. If we close above 2350, then this has still got legs. Now we're below the 50-day average, so we've got to get above 2350. That's a significant sell there. Let me clear all this. It's getting too cluttered. But all the time, the volume is holding up above these volume averages. We are getting higher closes. Then certainly don't sell and pick up these support levels. So what's the support level this week? 2,300. If we pull back into that support and hold, so we get a 1, 2, 3 wave correction. Yeah, this looks good to me. Go back into that 2,300 and even underneath it somewhat. If we then hold, then expect that to go back to the highs and potentially go on another run. So for gold, watch out for that low, which was, if I clear this rubbish again. And so we've seen 22.90, 91, I think it was. So any sweep back into there, if we get a lot of some violent moves in the second half of the week, watch out for a violent move into that support. Let's have a look at silver, because silver is well worth looking at. Yeah, silver's done exactly as they're pretty comparable. The big advantage of silver is that this is an industrial metal, whereas gold isn't. I like silver here. I think this little move back here today was viable at 27, just under 27. Still time. If we see 27 tomorrow, and we can close above this 27.80, 28, then we're going to see 30, potentially see 30. So if this is a bull flag, whoops. Yeah, so 30 is my short to medium term target. Longer term, I can see that going to 35 plus. So if you pull back on this, you can see it's had a fantastic move from 21, 22. If at any stage in the next coming weeks we see 26, even 25, that is definitely viable. Any close underneath that 27, then be very wary. Um, let me just let me answer that question by looking at my other screen for a moment. Um, 26,750. So back to that Tuesday the 23rd. 2670. Um, that's I can see it. We're under the 50 average here, so I can see it pulling back into that. You might, like I say, any pullback into 25, 26 is definitely worth viable, but I'm assuming that with a bull flag like that, the lowest I can see at the moment from is that 2675, 2670. And let's cut across to wheat. Let's get an update on wheat. So it's had a good period. So we just got close to the December highs and we're seeing some profit taking. If I pan back, you can see the lovely breakout pattern. Channel low down here at 525, 527. Broken out from the 23 lows at 550, 553. This may well come all the way back to 580, having tested 630. I'm just sitting in it because I'm not using leverage. This is a this is a medium to long term trade for me. So any pullback I think is viable. Then next stop 650. If we're able to plow through that December high in the next few weeks, then I would see us getting to $7 to $8 into the summer. The cycle in wheat, let me just go to my cycle map. Yeah, so I would expect this to pick up into May, June. Let's identify May, June from here. All right, that's the end of June is there. So I would expect to see, let's just draw this cycle on here. So we have broken out, big wave one on the breakout. I expect a wave two to come back to 580. I expect a wave three to go into 650, 680, a four and a five around the $7 mark. And you're going to get little 5 and 3 way moves in between this. But the overall breakout, pullback, and move, I think, is going to take us into 7, potentially $8 this year. If it really catches a bid and really gets going, then I can see us getting to 10 plus. That's the bullish scenario. The bearish scenario is we at some stage close under 550 and this gets buried and goes down there to under 5. Okay, so that's the bull bear scenario. I'm obviously banking on the bull scenario, and let's see how that works out. Right. Not talked about. Oh, yeah, are we? Right. Uh, I have taken. I did two trades on oil, two day trades on oil. One in the Euro session, one in the US session. Um, in London, I bought 83 for about 50, 60 pips. And in New York session, I bought, what did I buy? 82.40, yeah, 82.45 and took it off into 83. So I took a couple of bites out of this. And so I'm flat at the moment. It looks to me as if it wants to come right back into this 80, 81. It's really struggling under here. Actually, that's a 20-day average, isn't it? Oh, stupid me. Ah, this is what comes from switching charts. That's the 50-day average. Ah, should check that. Sorry, guys. Should check that. Right, so we would still another touch of 82 or Fridays. Yeah, Friday we tested 81.95. I would look out for that 81.90 because if we come back and test that and hold, I can see that picking up again. I'm very bullish oil, so that's why I'm buying dips. So what have we got? We've got a 1, 2, 3 move. Very deep pullbacks. This doesn't. This is, I'm going to struggle here to match Elliott wave to this. All right, let's go back to December. 1, 2, 3, 4, 5. No, I'm struggling here. We're seeing a series of three ways. If I go back to a basic three wave, we've got a 1, 2, 3, a 1, 2, 3, 1, 2, 3, 1, 2, 3. Modern wave theorists suggests that markets move in shorter three ways rather than the old-fashioned 1930s. Was it Robert Elliott? I think it's Robert Elliott. Anyway, so we've got a 1, 2. If the 2 completes down there underneath the 82 mark, I think we can bash, at least have a go at 84. That's the bullish scenario of us going back to 87 plus. Bearish scenario is we start to close underneath that 82 and come right back into this longer term trend line and potentially lower. But for this week, I would target that 81.90, 82 on a retest of this nice bullish bar here to see if we can go back to 85 plus. That's what I'm doing at the moment anyway. Must check those moving averages. That's really annoying. Right. Stocks. Miners. They're still holding up. There we go. There we go. That's through 25. So next stop looks like 27. It's a very sweet chart, and we're coming up on volume. If ever you see a market that's pushing up, always double check you've got the volume increase to warrant that. If you come up with lower volume, watch out. So we came up here on higher volume. Volume struggled a bit here until we got that squirt higher there. So it's doing all right. As long as this volume holds up, then we can get to 27, 28 on that one. I suspect the others are going to have similar patterns. Here is Griffin. Wow, Griffin's doing well. That's almost doubled from the December 80 mark. And look at the volume. Volume is still increasing. This here is justified with a higher volume. Look at this consolidation. This is an incredibly bullish consolidation. It goes really flat, and then the 50-day average starts to catch up. And then once it gets close to the 50-day average, so we're far away from the 50-day here, closer to the 50-day average here, and then we fire up. We look as if we're going to consolidate here. Well, we do consolidate, but we don't wait until the 50-day catches up. We just get going. So move consolidation. Let me clear this. Move, consolidate, move, consolidate, move, consolidate, breakout. So this, okay, so if that follows the pattern, this might sit up here at 150, 140, 150. Because this 50-day average is now miles away. We look as if we can see 160, 170 on that, assuming that the momentum, assuming we stay high and don't get any significant profit taking or sell off. Yeah, sentiment. Sentiment is in a consolidation phase. It's at a so we're sitting on this January 23 high. So you might see 120 again on that. If we see 120, that looks as if it's wanting to go to 140. And let's look at, yeah, Anglo was in the news last week, wasn't it? Yeah, that's gone. You can see my old drawings here. We looked, I was looking at this 1655 in March. We broke out of this pattern in April 2nd, consolidated in the second half of April, and then broke again. So we're seeing this pattern a lot in this sector. Miners look as if they're doing, look as if they've got more mileage at this stage. So look at how the volume picks up. So this consolidation, so the buyers are stepping in here. You can see the buyers are already stepping in at that 650. And we push up, we pull back. So we catch up with 50-day average, and then we run. We consolidate. We above that 20 mark, and then we're through into this resistance area already. So we got April 23, we're up here. This may still consolidate. This may pull back into some support back here. My pen is really slow today. It may pull back. If that holds, then we look as if we can go to 30. That's a bit ambitious. It's like, as I said to you in the WhatsApp, in the Telegram room, once these things break, they're much harder to predict, because you know, let's face it, if you were down here at 650 and you're seeing this at 2750, what would you do? Would you take profits? Would you just walk away and ignore it and leave it? I would be taking profits. So that's why, but I could be wrong. I could be this could just keep going. The volume is coming off. A lot of people in that support down there. So I would not chase that because that might come all the way back to July highs. We'll see. Right, moving on. Let's have a look at some financials. Right, come on, where's financials? Where's my financials? Got it. Let's look at the Barclays. This is an incredibly bullish market. Um, look how it breaks up. So the whole theme of today is consolidation. Breaks up on volume. So a lot of profit taking at that 195, and we drop right the way back to 177, 175. Now, this is another bullish consolidation. By the time this drops into 175, the 50-day average is catching up. Doesn't connect with the 50-day average, but the 50-day average is catching up. And then we go on this huge run up there. And look at this pattern. Support down there at 125. We run. Another test to 125. We run. Now we pull back to 135. Little move, 135, and then double bottom, breakout on volume, and then we really start to go. So we get a big push up here, very shallow pullbacks, and then we run. So pattern, let's look at pattern around here. We've got, you can see this pink zone here. So we got a move off of there in June 23. We failed here in the autumn, but we failed and then got right back on the bike. And then we started to 135, started to buy again. So this is, I talked about this with the drop in wheat. Got all this support. So stocks do it as well, but it's more common in commodities. You would have thought that 135 would have held, but no, they took it back to March lows. Yeah, this is a good stock. These guys have got a good balance sheet. So this is a good value stock, if nothing else. And then, so once they dip, you got a lovely head and shoulders. So the neckline is, I've not got the neckline here. The neckline is right across there. So when we break up here, we're breaking the neckline. When we break this late February, early March, we're breaking that neckline, which has been formed over a period of 12 months. Pretty much bang on 12 months. So, and cyclically, this is a good time to buying stocks in this early part of the year is a good time to buy if you've got that support. Right, that's what we're going to look at. Prudential. Right, this Prudential looks like we're at long last could be coming into play. We breached support down there at 690. And then look at the volume coming in on this. So the only box it doesn't tick is that 50-day average. Volumes are not great, but they are definitely picking up. That volume, so we had a big spike in the volume there on the 18th. We broke up and pulled back into that range on the 26th, last Friday. I think this has got legs. I said that before, it's not worked, but if we can start closing above 750, I think that's got legs into 8, 9, 10 pounds. It's really beaten up because this was 1340 last year. Wow. January last year we was 1340. This is a good stock. They've got a good balance sheet. It's really untidy. Let's tidy this one up. Hmm. It's got a clear downward trend line, isn't it? Look at this. Every time it knocked into that trend line, that broke. So this move last week, so we've busted up. I've done this a couple of times, but this is a bit more convincing. So when we broke up on the 26th, we broke the trend line. Then we retested the upside of the trend line at 710. So if we can test that £7, 710 again and hold and stay above this trend line, then we got potentially got legs. 22, where's 23? 23 lows. 23 lows are there at £8. Yeah, let's keep coming. I'm going to keep coming back to that, but I think that's got legs. Right. I'm using up a lot of time today. Let's just have a quick look at healthcare, a sector I like. Anything you want to look at? Bristol Myers. Ooh, didn't expect to see that. We certainly saw a lot of some lower prices coming into early April. Medtronic has come back to the pink zone and held. Volumes are picking up. That looks better. Um, AstraZeneca zooming away. AT&T, okay. Um, so a quick look at catch up with some of the commodity-based stocks. Elementis, that's picking up again. Rio seems to be struggling up there, but it's holding up well. CPI cap. Not sure what's happened to that. That looks a bit scary. Let's look at retail. Royal Mail. Wow. Um, EasyJet's had a good time. God, October that was down to 350. We've recently seen nearly £6. Very handsome move. Well, yeah, so we broke. Look at that. We broke that channel, but we closed above it on the 2nd of November. Ever since that move on the 2nd of November. So typically we break support, close above it a few days later, and then go on this huge run. Let's look at next. That's had a good run, sitting up. British Airways, very similar to EasyJet, Tesco. Yeah, so the markets are actually in quite good rude health at the moment. Right, let's look at your AT&T. I always struggle with this one, didn't I? What's the ticker for this T? Right, I haven't looked at this one for ages for some reason. I always struggle to find it on this platform for some reason. Tell you what, let me look at this one. Now, this has come right into the area that I wanted, 180. I think this is viable. Um, I think that is viable. And why can't I find AT&T? I always struggle. I can't find it using this platform for some reason. Let's have a look at things like that's picking up again, AMAT. What else do I want to look at? Let's try TN. Yeah, okay. One last go, but I don't know why, but I struggle. No, can't find it. It's this platform. If I was on my other platform, it'd be all right. Um, oh yeah, stop looking at this one. This has been flying. Premier Foods. I think this likes of Boo and ASOS. Yuck. Right, okay. That's it for now. Anything else? Copper. Right, okay. Uh, wow. I'm hoping wheat's going to do something like this, but we'll see. That's just gone. Um, looks if that's going to head for 48.50 at this stage. Any pullback to 45, another retest this breakout area. Wow, that's hard. They get hard to call when they pull back, but 45 might do it. Um, coffee. That's pulling back. 22 seems to be getting bought there. Natural gas, probably still too early for this one. Gas is only doing shallow pullbacks at the moment. I would back off. Still think, yeah, this 2050 is a tough area for it. We already had a big drop in the top of that grey zone. So I'm getting ready to buy this in a short while if we can see a deeper pullback. Pound yen I did earlier. Pound yen is just to be left alone at the moment. Watch the beginning of the video. I did a big piece on pound yen. Tell you what, let's have a look at USD. So we're heading into monthly jobs. Yeah. So that's pound yen's done the same. It's touched 200 and done the same. I would be very careful with these yen pairs at the moment. If there's a sniff of intervention, they could get very wild. I would wait until this settles down. Um, yeah, so 160 was the resistance area. We've tested that 160. Any pullback to 150, 152 now. But I'll be, like I said, these some of these currencies that get intervention can really be very, very wild. So I would back off and just look at oil, gold, and silver. These kinds of things at the moment. Just back off these wild horses. Brilliant. Thanks, guys. Hope that helps, and talk to you soon. Cheers.